Value zones are areas in the price chart where a high volume of trades are traded. These zones indicate that a given price has been traded frequently and may represent significant areas where prices tend to move or consolidate. The importance of volume in these zones lies in the fact that traders perceive high-volume areas as confirmation of the stability of a given price and evidence of strong interest activity in a given price zone. Value, or value zones, are often considered the strongest support and resistance levels in the market because of their association with trading volume and historical price behavior. These zones indicate price areas where there has been high trading volume in the past, which may indicate that these price levels are considered key. The claim that order blocks are the best levels in the market is a common opinion of some traders, but it is important to remember that trading is not always about absolute rights and universal rules. There are many factors and techniques in the market that can have different effectiveness depending on the specific context, market, and trading style. Here's why we should be careful about seeing order blocks as the best levels and why value zones can be more useful in many cases. Why order blocks may not be always the best levels. Order blocks are price areas formed when there has previously been a significant price movement, which is the presence of strong orders, buy or sell. The main assumption is that these blocks represent the area where the big players, institutional investors, banks, have executed significant orders. Based on this analysis, some traders think that these levels will again be stopped by the price when the price approaches them. However, this is not always true. Here is why order blocks may not always be the best cause. Subjectivity of the definition. Different traders can define the blocks of orders required. Someone may consider a block a larger price range, someone a smaller one. This can make a big difference in where and how these levels are used. Why value zones are a better choice. Value zones differ from order blocks in that they focus on areas where high trade volume has occurred. Unlike order blocks, value zones develop together with the market, so they remain relevant. These zones represent price areas where the market has been very active, and traders consider these price levels to be fair in terms of value. Unlike order blocks, value zones are oriented to historical behavior of price and trading volume, which makes them more stable and robust for traders. Traders should be careful when claiming that order blocks are the best levels in the market, as these areas are not always stable and can be subjective. On the other hand, value zones offer a more comprehensive view of the market because they take into account trade volume and historical price behavior, making them stronger and more reliable areas for trading. Value zones are more flexible, take into account market conditions, and are often more based on market reality, which makes them a useful tool in many trading strategies.